The suits are holding, so who was behind the market crashing? JPMorgan says, driven by crypto-native investors. Welcome back, folks. Time to catch up with the market on SoSoValue Crypto Daily. All right, let's rip the Band-Aid off and look at the numbers. The market is taking a bit of a breather today, with the total crypto market cap pulling back 0.72% to land at $3.78 trillion. Bitcoin is down 1.7%, hovering around $108,500, and Ethereum has slipped 0.8% to about $3,900. It's a sea of red out there, with most sectors down 1, 2, 3%. The one getting hit the hardest is DePIN, the decentralized physical infrastructure networks, which took a 6.5% dive. But hey, there's always a green shoot somewhere. The AI sector is actually bucking the trend, thanks to some serious momentum from the newly launched KOI token. Always something interesting happening. Now for our top story. With all this red, everyone's asking, who's selling? Is it the new ETF money getting spooked? Well, the brilliant minds at JPMorgan have an answer, and it's a plot twist. They're saying last week's sharp correction was primarily driven by us, the crypto-native investors. Get this, the data shows that the spot Bitcoin ETFs, which are super popular with traditional retail investors, saw only tiny outflows. We're talking a net of $220 million, which is just 0.14% of their total assets under management, a drop in the bucket. Ethereum ETFs saw a bit more action, with $370 million in redemptions, but that's still just 1.23%. Meanwhile, the big institutional players on CME Bitcoin futures barely flinched. The real action was in perpetual futures, the favorite playground for crypto traders, where open interest plummeted by a massive 40%. So what does all this mean? It means the correction was mostly an internal crypto shakeout. The degens got a little over-leveraged, and the market did its thing. The suits and new retail investors, they're just holding on, watching us go wild. Honestly, this is kind of bullish for the long-term health of these ETFs. Next up, the 800-pound gorilla of finance, BlackRock, is making another massive move in the digital asset space. They've just updated their Select Treasury-based Liquidity Fund, or BSTBL, to specifically comply with the U.S. stablecoin regulatory framework. They're basically building a fortress-like reserve for stablecoin issuers. The fund now has higher liquidity, and they've even extended the trading hours to 5 p.m. EST. This is huge. BlackRock isn't just dipping a toe in, they are building the foundational plumbing for the entire stablecoin ecosystem. This is how you get to $1 trillion stablecoin market, folks. Major league legitimacy. And speaking of big money moves, Ripple is making waves. They just announced a jaw-dropping $1 billion acquisition of a firm called GTreasury. This isn't some small startup. GTreasury is a veteran in enterprise treasury management with over 40 years of experience serving huge global brands. Ripple's plan is to merge its blockchain payment tech with GTreasury's corporate finance solutions to, and I quote, unlock trapped liquidity. Imagine giant corporations being able to move money in real time instead of waiting days. This is that real-world utility we are always screaming about. This is Ripple's third major deal this year. They are not messing around. From corporate finance to something a little more fun or chaotic. According to Bloomberg, the CME Group, the home of traditional futures, is planning to launch financial contracts tied to sports events and economic indicators. They're stepping directly into the ring with prediction markets like Kalshi and Polymarket. It's like the final boss just entered the level. It'll be fascinating to see if crypto-native bettors stick to their decentralized roots or jump over to the regulated mainstream platforms. Place your bets now, literally. Finally, another legacy giant is getting ready to join the party. Charles Schwab's CEO, Rick Wurster, confirmed that they plan to roll out spot crypto trading in the first half of 2026. Okay, 2026 feels like a lifetime away in crypto years, but this is a huge signal. Wurster basically admitted they need it to compete with platforms like Robinhood for younger clients. The institutional herd isn't just coming, they're building the highways for the next generation of retail investors. That's a wrap for today's update. Catch you tomorrow, same time, same place. Cut through the chaos, focus on what drives the crypto market. Stay on top of crypto research, all in one place at SoSoValue.com.